The trend in global markets from late last week extended to Monday, with stocks surging. Broadly, the narrative last week was around U.S.-China trade hopes, with softer than expected U.S. inflation boosting bets for a rate cut at the Federal Reserve meeting this week, and potential trade deals from President Trump's visit to Asia triggered a cross-asset rally. In fact, despite bets of easing broader trade tensions, geopolitical posturing by the West featured as the top driver of assets last week. Oil was the biggest gainer after the U.S. sanctioned top Russian oil giants. Benchmark Brent crude surged 7.5% to above $66.5 per barrel after languishing near $60 for much of October. The fall in precious metals from record highs was another big theme last week. Gold pulled back sharply, down 3% to below $4,140 an ounce, while cryptos are still to recover from the flash crash on October 10. Bitcoin regained its composure to rise 3.4% to above $110,600. In fact, turning to Asia-Pacific stock markets now, it was a wave of green. From China to Australia, stocks surged on hopes of trade deals during Trump's first visit to the region. The confirmation of a high-stakes meeting between Trump and his Chinese counterpart boosted Asian stocks. The Japanese stocks were the biggest gainers, hitting record highs after pro-business new Prime Minister Takaichi was elected, and the Indian stocks were boosted by solid festive sales data, with both benchmarks closing in on their all-time highs. The Aussie index gained 0.7% after signing an $8.5 billion critical minerals deal with the U.S. and boosted rare earth stocks and investor sentiment. In the Americas, Wall Street stocks ended the week at a record high, extending a bull market that's already added $30 trillion to its value since April lows. Easing trade tensions between the world's two largest economies is giving investors a fresh boost, but this week will be the bull market's make or break, with big tech firms scheduled to report earnings. The Canadian stock index closed the week in the green despite the Trump-Canada fallout due to Ontario's anti-tariff ad. The Brazilian benchmark rallied on hopes of a trade deal with the United States. And across the Atlantic, benchmarks in the region gained. The UK's FTSE led the charge with over 3% gains. The German index and the French one also closed out the week in the green. However, the South African stock index fell marginally on high debt worries. Having looked at the market moves, let's now turn to the overall economic outlook now. In Asia, India still remains the bright spot. China's economy continues to show a loss of momentum. Beijing faces deflation risks, a recession in its real estate and consumer demand. While the fourth plenum showed Beijing's focus to overcome those issues, no concrete steps were detailed. The ongoing trade discussion continues to weigh on Japan and Australia, with the outlook for most of the other regional countries in the negative. A slowdown in global trade from the U.S. protectionism is likely to offset any green shoots from domestic policies in Asia. In the Americas, the second longest government shutdown is now starting to hurt the economic activity. Weakening business activity and a cooling job market will likely push the Fed to cut rates again this month and in December. The outlook for Canada, Brazil and Argentina is also negative because of Trump's trade rhetoric. In Europe, the situation looks much worse from deepening troubles in controlling budgets. France is not likely to meet its budget target, with the politics compelling economic disasters. UK continues to struggle to fill a budget black hole, and Germany is losing its shine as the growth engine. However, easing trade tensions could boost the region's outlook. Trump and Xi Jinping's meeting this week will likely shape the next phase of the global economic outlook.
To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.